Imagine you're standing at the edge of a vast forest. You've heard tales of treasures hidden deep within, guarded by the challenges of the unknown. On one hand, there's the allure of what you might discover. On the other, the unease about what you might encounter. Investing, my friend, is much like this adventure. It promises rewards, but also comes with its own set of risks. Let's explore some of these risks together, so you can venture in with wisdom rather than blind optimism. Picture a young couple, excitedly planning their financial future. They've heard that investing in stocks can be a great way to build wealth, so they decide to put a significant chunk of their savings into a single, promising tech stock, riding the wave of recent success stories. But then, the company releases a disappointing earnings report, and suddenly the stock price plummets. They're left feeling anxious, questioning their decision, and wondering what went wrong. This is what we call concentration risk. By putting all their eggs in one basket, they expose themselves to the volatility of a single company's fortunes. It's like balancing your entire picnic on the edge of a wobbly table. Diversification is the sturdy table you want, spreading out your risk across different investments, so one bad apple doesn't spoil the whole bunch. But there's more to consider. Let's talk about market risk. This is the risk that affects the entire market, not just a particular stock or sector. Think of it as the changing weather in our forest adventure. You can have a clear day turn stormy without much warning. Economic downturns, geopolitical events, or sudden shifts in investor sentiment can impact your investments, regardless of how well you've chosen them. While you can't control the weather, being aware means you can pack an umbrella and prepare for those rainy days in your portfolio with a solid mix of assets. Now let's delve into what keeps many investors awake at night: the fear of losing money. It's a very human emotion. Risk perception is often more about how we feel than any objective reality. Our brains are wired to react more strongly to loss than to gain. It's called loss aversion. This can lead us to make impulsive decisions, like selling out of fear during market dips. Instead, think of investing as planting a tree. It takes time to grow and bear fruit, and sometimes the seasons aren't kind. But if you're patient and tend to it with care, it can yield more than you ever imagined. Remember the 2008 financial crisis? Many lost faith in the market, pulling their money out in panic. Yet, those who stayed the course and continued to invest in a diversified manner often saw their portfolios recover and grow in the years that followed. This illustrates the importance of a long-term perspective. Short-term fluctuations are just part of the journey, not the end of the road. There's also the risk of inflation eating away at your purchasing power. The money you stash away today will buy less in the future if it doesn't grow at a rate that outpaces inflation. It's a sneaky risk, often overlooked, but it's like the slow erosion of a beautiful mountainside over decades. Investing in assets like stocks, which historically have outpaced inflation, can help protect against this. Then there's liquidity risk, the danger of not being able to access your money when you need it. It's like being in the forest with no clear path out. Some investments, like real estate or certain bonds, may not be easily sold without taking a loss, especially in a hurry. It's crucial to match your investment choices with your needs and timelines, ensuring you have enough liquidity for life's unexpected turns. Finally, there's the risk of not taking any risk at all. It might sound counterintuitive, but avoiding investing entirely can have its own perils. Keeping your money under a proverbial mattress or in a low-interest savings account can mean missing out on the growth potential that investing offers. The key is finding a balance that aligns with your comfort level and financial goals. In the end, investing is a deeply personal journey. It's as much about understanding yourself as it is about understanding markets. Recognize your emotions, your fears, and your dreams. Approach your financial forest with respect, charting a path that acknowledges the risks but isn't paralyzed by them. Like any explorer, equip yourself with knowledge, a clear plan, and the patience to weather the seasons. As you ponder these thoughts, consider this. Wealth is not merely the sum of your investments. It's the freedom to live life on your own terms, the peace of knowing you've planted seeds for future growth, and the gratification that comes from seeing those seeds blossom in their own time. So, take a deep breath, embrace the journey, and step into the forest, eyes wide open.